Hello everyone. Today we want to talk about one of the most influential companies in the world, Sony Group Corporation. Sony was founded in 1946 by Masaru Ibuka and Akio Morita. From the very beginning, it combined engineering excellence with strategic vision, an approach that still defines the company today. The early years were not easy. The first products failed, but in the 1950s, Sony made a critical decision. It adopted transistor technology from the United States. That choice enabled portable, affordable radios and open global markets. This is where Sony's identity was built, not just innovation, but it is about strategic innovation. Over the following decades, Sony consistently anticipated the future. The Trinitron television set new standards. The Walkman redefined personal music, and the CD player developed with Philips transformed the industry. Sony didn't follow trends, but instead it created them. In the late 1980s, the company made another bold move, entering the entertainment industry through the acquisition of CBS Records and Columbia Pictures. This was more than diversification. It was the creation of a unique ecosystem combining technology and content. Like any global leader, Sony faced challenges in the 1990s and in the early 2000s, but its response was decisive. The launch of the PlayStation didn't just succeed, it reshaped the gaming industry and became a core growth driver. Today, Sony is a global leader across multiple sectors, from image sensors and professional cameras to entertainment and gaming. It continues to influence both technology and culture. So, why is Sony important? Sony is important because it demonstrates that long-term success is not linear. It requires bold decisions, continuous reinvention, and the ability to evolve ahead of the market. The leadership takeaways is clear. To stay competitive, we must embrace change, invest in innovation, and think beyond our traditional boundaries. Sony didn't just grow, it transformed, and that is what makes it exceptional. Thank you. I pass the word to my colleague.
Yeah, hello everyone. I'll start by saying that our purpose is to fill the world with emotion through creativity and technology. And it's a purpose that shapes the way we design products, develop content, and interact with our global community. Our values of curiosity, diversity, integrity, and sustainability guide our decisions and ensure that innovation is meaningful, responsible, and long lasting. Especially sustainability is not just a principle, but an actual concrete operational choice, which is visible in the investments that lock in long-term environmental responsibility and innovation that will drive future experiences, such as the prepaid renewable electricity and the installation of renewable energy infrastructure, which translates sustainability commitments into actual assets. As for our action plan, we want to turn concrete activity by prioritizing continuous innovation, expanding entertainment ecosystems, and embedding sustainability across all of our operations. This shows up in targeted research and development courses and platform work such as the payment to external developers for PlayStation virtual reality research, the upgrade of cloud servers to scale PlayStation network capacity, and the purchase of semiconductor research equipment that sustains our technological leadership. Our business model combines intellectual property creation with enabling technology so that content can be exploited, as a successful title or franchise can be monetized across games, films, music, and merchandise, while our imaging and semiconductor capabilities power devices and connect people worldwide. The practical accounting evidence of this model includes semiconductor product sales and consumer electronic sales, also strategic equity in a mobile game studio to expand our intellectual property pipeline, and a joint manufacturing agreement that demonstrates how partnerships scale production without diluting our core capabilities. As for our future programs, Green Management 2030 and related programs are all about measurable reductions in life cycle emissions, a shift to renewable energy, product design made for circularity, and supplier engagement to raise environmental standards across all of the value chain. These commitments are reflected in the same capital and procurement choices that make sustainability operational, as the renewable electricity prepayment and the installation of renewable energy infrastructure that anchor our long-term emissions and energy strategy decisions. As for a little insight on last year's performance and the comparison with this year, we enter 2026, we exit 2026 with a stable operational profile when compared to the 2025 one. The resulting positive net income of this year demonstrates that Sony stays operationally efficient throughout the entire year. The 2026 balance obviously confirms this stability with a strong liquidity, diverse assets, and equity comfortably exceeding liabilities. The comparison overall shows a company that remains financially sound, operationally efficient again, and well-positioned to continue investing in innovation and growth. Thank you very much. I'll pass the word on to my colleague.
Hello, let's take a look at the SWOT and best analysis of Sony. Starting with strengths, Sony's biggest advantage is its strong portfolio of intellectual property across gaming, music, and film, with major brands like PlayStation, Sony Music, and Sony Pictures. So these combined with Sony's leadership in imaging technology and its diversified business structure give the company stability and a strong global presence. However, Sony also has weaknesses. Managing such a wide range of businesses can make operations more complex and less efficient. The company also faces high production and research costs, and because it competes in several highly competitive industries, profit margins can also sometimes be limited. Looking at opportunities, Sony is in a great position to grow with the rising global demand for digital entertainment. It can expand its intellectual property by turning game franchise into films or series, while advances in AI, virtual reality, and imaging technology create new paths for innovation. The growth of streaming services also opens more revenue potential for Sony's music and film divisions. But there are also threats. Sony faces strong competition from companies like Microsoft, Nintendo, Samsung, and Disney. Rapid technological changes means Sony must constantly innovate, and the entertainment industry itself is unpredictable. That means one unsuccessful release can impact revenues. Mm, Now, turning into the best factors, politically, Sony must navigate different regulations, trade policies, and geopolitical risks across global markets. Economically, changes in consumer spending, inflation, and currency exchange rates directly affected sales of electronics and entertainment products. Social trends like shifting consumer preferences and the rise of online communities also shape kind of content Sony needs to produce. And finally, rapid technological advancement pushes Sony to invest continuously in AI, gaming, imaging, and digital innovation to stay competitive. In shortly, Sony is a highly innovative and globally recognized company with strong content, technology, and diversification. Even though it operates in highly competitive markets and manages a complex set of industries, Sony's growth potential remains strong. Now I'll pass it to Walter. Thank you.
Thank you very much. I'll be speaking about the financial health of Sony. And as my colleague mentioned earlier, as far as the business strategy is concerned, Sony has been maintaining good financial health with a positive net income and a positive financial health in general. Differently from the previous financial year, this year has been marked by a growth in product sales volumes. This is different from how last year Sony's profitability was more broad, but this year the product sales have increased. So both years, this year and last year, have shared revenue growth, but from different segments, of course. In this particular year, as far as cash flow is concerned, there have been strong cash flows from sales collections and receivables, and also high cash outflows in terms of equipment and infrastructure, but also in terms of paying wages in marketing and legal expenses. This is highlighted also in how my colleagues had mentioned Sony's drive towards sustainability. Sustainability is a good form of investment, and this is reflected in the transactions that Sony has been making. And this, of course, is reflected in Sony's cash flow in this financial year. But even though there has been a high investment-heavy cash usage, Sony has still managed to maintain a healthy liquidity. As far as our assets, as far as Sony's assets are concerned for this particular year, there has been growth in property, plant, and equipment, and intangible assets as well. Just to mention a few, such as cloud infrastructure, game studios, and energy systems. As far as just to mention our financial notes, our notes to the financial statements in brief. Inventories have amounted in 1,310,000,000, which is consistent with the component stock and finished goods ready for distribution. The majority relates to electronic components, with the remainder representing finished merchandise. There has been an increase of 3.7% versus the previous year's value, and this is within normal working capital variation. As far as revenue recognition is concerned, there has been 17,900,000,000 in terms of sales returns, which is in line with the previous year's figures. And so that's as far as revenue recognition is concerned. And as far as long-lived assets are concerned, there has been an increase of 33 trillion 390 billion, which reflects routine capital expenditure aimed at maintaining and upgrading production equipment and digital infrastructure. So in general, Sony has managed to be stable in terms of its financial health, but has taken a different stand from last year's position to be focused more on sales and investing in terms of its property and its long-lived assets. So that's all for the financial health of Sony.